Yeah, my fault. My mic was not connected there. No, we're good. Good job, good job. Almost, I was just lining up these highs right here. What I was saying though is we're just gonna watch the original fair value gap here that's formed at 9:30. We've just ran out this buy side. So buy side cleared. I'd like to see pretty much the low of this 1 hour, which is the midpoint of our opening range today, coming off of this first presented area here in price. Even though it's not the actual 931 fair value gap, it's overlapped with an original first presented and 830. So I would expect something like this to hold us if we're going to want to accelerate again into the high. We didn't close above buy side. That would have been nice confirmation. So for us, this is more of an anticipation that we want to continue bullish. What up, Zoom? But if we're going to continue to chop, right, we might get back under it. For the time being, I think that is an area in price that should hold though. So I'd want to see if this fair value gap paired, as we said, overlapped with this original first presented, is going to want to hold price, give it another leg higher into yesterday's first presented. Or if we basically roll over on itself, right, we may just keep chopping here this morning. So far, look at the candlesticks, right? Very ugly delivery. Not surprised. Right, not really fundamental guy, but when we have talks like the war that's about to go on right now, right, that's just going to cause a lot of uncertainty. And something like that is kind of hard to ignore, right, from a fundamental standpoint. Usually most other things I don't worry too much about, but when you're kind of floating with the idea of putting the US into war, it's going to cause some uncertainty in the market, which will lead to just ugly price action. My bias, as I said, I'd like to see midpoint of this opening range. So I'd like to see, right, that's the high of this new day opening gap. It's the low of a 1 hour fair value gap as well. So that's kind of what I would look for to see a price run higher. For the time being, yeah, yesterday was clean, right? Monday, we had a nice little long that we shared there. Didn't even need to capture the whole move, but yeah, we'll see. So far, just choppy. As I said, if I had to pick, I would favor another run higher on buy side. So we're going to watch this little fair value gap here, see what happens. What up, Blaze? Yeah, I was gone for a little bit. Been live though for the past few weeks. So if we want to see this hold, as we trade into the low of it, maybe that volume balance needs to get messed with here. But we would ideally want to see, like if we're going to wick, we'd want to see wicks into the volume balance and have the bodies hold the actual fair value gap. So now that we've hit that, we'll see what happens here. As you say, we could wick into that as long as the body can maintain the fair value gap in the original first presented. If we're going to fall outside of that and close below the volume balance and the first presented, I just look for a retracement into an untapped inefficiency, maybe like here. Right, so we have an open fair value gap right here that is yet to be traded into. And then we have a little short-term low that's sitting right there. So it'll be kind of the short-term objective, sell side. You have sell side there with that inefficiency. So far, it's trying to make an attempt lower, volume balance still holding bodies. That's kind of what we're expecting to see. As long as we do that, I would look for a run higher. As soon as we fall through this volume balance with the closure below, that's when the expectation would flip to look for lows and look for this little trend line liquidity to potentially be ran out. Let's say that we could do that. That we fall through this volume balance, we return into the sell side. If we can hold from here and give us another long, I'd still like that. Because now, even though we did clear this buy side, this is pretty much more like relative equal highs. So that'll be another objective to aim for in the future. This right here. So far, volume balance trying to hold us. We get under, this becomes an inversion. So look at that, we closed underneath it here. We've opened now with the bullish volume balance, but as we often say, one candle's chance to negate the previous candle's action. So if we can close below this again, then I would definitely expect just a short-term run lower if we're not going to do it right now. Right, closing below is the early indication that we want to actually make another move lower into some of these sell side objectives. So if we get another closure below, we would expect that to continue. Say this candle snaps back right back above, it will negate this candle's actions. And that's more of a sign of that consolidation actually. So we'll have to just wait, but it looks like we'll probably close below, make an attempt to clear out this sell side here, return into that untapped inefficiency down low. Right, once again paired with overlapping first presented. So another way that we can expect the choppiness is when we have a lot of time-based PD arrays overlapping one another. Right, so we have 1, 2, 3 first presented, then you have the 830 open, all in this little area in price. Close below. Okay, so now I'd look for the opposite pretty much, right? Volume balance should act as an area of resistance. The original fair value gap, we'd want to see if that doesn't also offer resistance, become a bearish premium to try to get into the sell side. If our objective is the buy side up here, at this point I would favor to see the volume balance hold, send us lower into some sell side down here, maybe into that inefficiency, and then we would look for a long setup off of that area. NQ cleared its high as well. Still inside that fair value gap created at 930, so a little bit different, could find support in there. As you said, if we're going to kind of negate this, get right back above, we would look for that choppiness, to be honest. Left the lows, we couldn't clear that low unfortunately. Did we hold that volume balance here? No, we fell through that. Yeah, so pretty ugly so far. Only thing really helping us is we do have the 5 minute I'm looking at. So we've inverted this heading into the opening. Here, we've hit the low of it perfectly. Now we close above, we retrace perfectly into its low. So if we're going to accelerate away from it, we would want to pretty much see these equal lows be protected, but the fact that they're equal lows is just ugly delivery, right? That's going to be tough sell, tough buy. But if we can leave this 5 minute, in theory, the 5 minute should hold. Because now we've repriced into it as the inversion, we've rebalanced it as we close above. Right, this 5 minute candlestick will close here as well now. So yeah, we would expect that if we do want to run for the buy side, although we have equal lows here, you wouldn't really want to see those be messed with. If anything, you'd want to see the volume balance and the 5 minute here, paired with the 1 minute overlapping be where price finds support. So you'd want to see something like this. Equal lows is sketchy into the buy side. It may just run. But now that that 5 minute has been rebalanced, we wouldn't want to see price break those lows in there. And we'd look for buy side here. Not in a rush at all to really push anything. Right, start of the week off good. As we said, expectation is rather choppy price delivery now. So we'll need to have pretty good confirmations. Yeah, could be a hard read this morning. I really do think that whole war nonsense is going to be a hindrance in price delivery for who knows how long, man. Unfortunate, but good thing is we know how to work within small ranges, right? So it'll be more so base hits that we're looking for. I just said, if we do fall short here, what is that? Equal lows a little sketch. If we want to go below the lowest close, that's 1, 2, right? That might be a nice little ends. With the expectation that the 5 minute inversion should hold us paired with the 5 minute reclaim bullish. We'll try this very small risk here actually. Just to see, right? I want to get a gauge with what the market's trying to do here this morning. 0.25%. So the expectation is we'll look for like the failure swing here to engineer a little bit more of that buy side liquidity at these highs. And then as we tap into that volume balance, that's where we want to be entered. And we're going to see if we fall right through this 5 minute for us, that's going to be kind of a clear cut sit on the hands for the rest of the morning, to be honest. Because now we're just getting real choppy in here, right? Back and forth. Ignoring PD arrays. That's what we expect in very ugly conditions. And if that's the case, as we said, we're just going to have to wait for more confirmation. Purely paper entry here, demo. For me, I don't know if we'll take any actual live trades. We're going to need pretty strong confirmation. So this is more so just gauging right market interest. Straight through the low. Yeah. So that's fine. Quick. Right. Invalidating these PD arrays, as you could see. Up and down through PD arrays like this. We go right back towards our original objective, the sell side here with the fair value gap. Can't even get into that. All right, so that's just, yeah, that's very sloppy. We're going to disregard the actual 5 minute, but then we're going to fall short at the sell side. Bearish volume balance, we should run into sell side. Watch the 5 minute low. Right now that we've cleared that short-term low, let's see if this volume imbalance accelerates us. If we negate the bearish volume imbalance here, close it in bullish, that will be negating pretty much that bearish delivery. Yep, just gonna have to wait, right? The original kind of talk of it all is where the uncertainty is gonna come from. I'm sure if he ever does declare like, yep, we are actually in war now, things will kind of get accustomed to that, but until then, uncertainty for sure. Ten handle slip, yikes. Yeah, low volume, right? So it's very, like, just look at the, that's what I'm saying. Look at the candlesticks here. You can just tell, right? Very low volume. Very ugly. Lot of volume imbalances. That right there is why we believe this consolidation is going to take place. That's textbook for that. And now, do we get, yeah, we couldn't get into that. Whole coalition of first presented, so yeah, going to be ugly. How do I deal with the differences? For me, I only use continuous. So I'm not someone that switches between them. And that's just because I like that for the continuity's sake. And it still delivers as we expect to the levels that we're looking for as well. So it's not too big of a deal. Plus when you enter, it'll automatically enter you on the current contract anyways. Which is nice. That's the only reason I used to switch between like the monthly contracts and trading views, because you can actually execute on the continuous chart. But they've integrated where any entries on the continuous chart will automatically get placed on the current contract month. Yeah, this is disgusting. Okay, so for us, this probably means that I doubt I'll actually take an entry this morning. Unless we got something very, like, let's see, for me to feel any type of, honestly, comfort, we would have to really, like, run down into this original sell side. Because I think we're going to be range bound, which means you want to use extremes of the range. So if we did come down into this here, that'd really be the only time I'd be willing to try to put something on. I'm not trying to do anything in the middle of this range at all, to be honest. So either we come down here or we clear out the buy side, hit the 1 hour fair value gap high. For me, that's the only way that we're really going to engage this morning. And I'm perfectly fine with that. In ugly conditions, you have to be very demanding of your entries. So there's no need to be, right, just entering to enter. If you're trying to demo, that's fine, like we're doing here, just to get a sense of what it's like. But if I'm going to put any real capital, we're either going to have to see lows here first or highs. For the time being, we'll just watch the nonsense in between. We still can follow this though, right? So now let's see, if we're going to create a failure swing, we've created a bearish fair value gap. This can kind of be seen as the first presented from today. Actually, I would probably use, no, I would use this here. Yeah, that'd be the first. So we've inverted that already. Another reason we were trying to long right first, actual presented, fall right through it, becomes inversion with the original volume imbalance. So we can still look at the PD arrays and see if they're going to offer us any type of setups. But already when we're kind of disrespecting them back and forth, you don't put too much emphasis on them, and you have to rely, as we say, on the time-based PD arrays. So more so like 8:30, these first presented fair value gaps here. Higher time frame, right? So like the 5 minute I'm going to keep up. higher time frame will help in this choppy delivery. So far, the low did hold. And yeah, couldn't get into the actual sell side. I wouldn't enter until we have something down here. Because yeah, unless we run out of low, we're just in the middle of the range. So I'm not trying to enter until we actually get a setup. And no, if you're referencing this right here, this was simply using the 5 minute. Right, if you're going to follow actual order flow itself, as we create the inversion, closing above it here, the very next candle opens with a bullish volume imbalance, trades perfectly into the low of the 5 minute inversion, holds the volume imbalance body, and then closes above the actual previous candle's high. Right, so in true order flow delivery, this 5 minute would be completely balanced and you wouldn't make an attempt to come back into its consequent encroachment, which means the equal lows would stay in place. But in a consolidation market like this, you're going to continue to disrupt lows and highs, right, which is why it's simply a demo. Gauging if the market's going to consolidate or if it's going to want to create some type of bullish momentum. Falling through that to us explains or shows that consolidation is likely, and that's what we would expect to continue. So there's always a reason. Yeah, right, look at those wicks. That's another way you could tell. Violent candle bodies with quick wicks, small bodies, long wicks on both sides. Or if the wicks are larger than the bodies, just a no-go. Yikes. Okay. So pretty much, yeah, what we would expect here. Range-bound delivery. Let's see what the actual current leg is. Highest high would be before the low. Okay. Yeah, I mean, ideally, right, I would still, if I had to pick, I would favor that run higher. But we don't have to force anything in between there. And that's simply because as I look at the original range, so we have this high to this low is kind of that dealing range that we were within. High to low, consolidation overnight. We run those lows out in the morning during London. Once we make another attempt twice, so we've cleared the actual sell side. We then revert into equilibrium of that original range, right, which is here, high to low. So now if I pull up midpoint, you'll see we're right at the midpoint. So if we're going to revert into midpoint after clearing the sell side of that range, that's kind of why I would favor and want to see the buy side of that range be ran. If we're going to stay choppy, right, seek and destroy. Simply attacking the opposing liquidity that we've already cleared. Which is why if we can fall all the way down into this original, right, this is the 5 minute here. So say we fell into the 5 minute, gave us some type of bounce. I wouldn't mind trying to use that to then take long. Right, because we've also cleared this low just barely, but it was enough. Right, so we barely swept that low. And then we hold the discount and then we displace above the original liquidity. So for me, that'd be our area of interest. Either there or, as we said, up here inside the 1 hour fair value gap. Oh, there's plenty of highs in here. Right, all of this consolidation. Any of these highs will be targeted. This would be the external range where you would have to wait. Or at least for me anyways. So nothing inside of this. At this point, inside of here is just very low risk. Or low probability, high risk. So we're making another pass at the buy side. We'll see if we can actually get it. There it is. From here, I'd honestly expect rejection. Retracement into the 5, right? Like if we're choppy, that's what we would see. This candlestick will close within this range and it won't close outside of it. And then it will pretty much revert right back into equilibrium of that current range that we're within. So I'm watching for that. Let's say that we can start running into the 1 hour. That's where we'll start looking for a potential shorting opportunity for me. Yeah, so closing inside that range, right? That's what we would expect. We can't close above any of the highs. So we can't close above this high, this high, this high, this high. None of these swing points we've closed above. So we're still stuck in that range with the bodies. As we said, we would expect a retracement now back into the 5 minute. We left that fair value gap open as well. If we can, here, let's move this for now. If we get another entry, we'll show. So I want to clear the sell side, just clean it up. We're going to use, don't need the volume balance, very ugly. So pretty much relying purely on 5 minute at the higher time frame inefficiency now. Where's that buy side, as we said. If we can close with the candle body above a swing point, that would lead me to believe we can actually start running. But for the time being, I think we come right back into this 5 minute fair value gap here. So we'll go from the buy side, maybe into the sell side, right? Like this is when we would see this low get targeted, this low as well, and then we can get a return into this inefficiency. Bearish volume imbalance. So now bullish fair value gap. I would say if we can get below that, we should be able to run lower. And yeah, I like that. All right, consequent encroachment holds. Don't forget first percentage as well. So now that we've left that, I'm looking at this one because it's paired with the first presented here as we leave. So as we close above displace, fair value gap aligned with the high of a first percentage fair value gap. Areas like those should be key areas in price, but we understand it's choppy, so I'm more so looking for that to fail and then send price lower into lows. Right, we're not looking for a run higher at this point, to be honest. At least the 5 minute, I would expect. Okay, so close it below. There's the 5 minute that we're looking for. From here, maybe a bounce. My expectation would more so be, though, max carnage. So buy side's cleared. Opposing buy side would be this low now. Come back for the low. Hit the untapped inefficiency that's here. And then from there, honestly, probably another reversal. Okay, so 5 minute holds, quick aggressive spike up right into the buy side. Not really too worried about that, right? In this type of delivery, things like that are going to happen. That's why we get the huge wicks that we're seeing, because the candles create aggressive moves, pretty much give those moves back and close. We'll see though, if we can hold that and continue to push higher. As we said, we are inside of a first presented. The candle bodies, I mean, you could see all the PD arrays getting stacked here, which is why the consolidation. But we have today's actual first presented. And then we had, this is from, let's see what this one's from. Oh. This one was from last Thursday. Okay. So we have last Thursday's and today's. Right, today's is right here. That's where we see the candle bodies holding. Wicks are going into the 5 minute. as we said, after clearing that buy side, we would expect the retracement into the 5-minute at least, because that's equilibrium of this current range, right? The two areas here. Don't forget that. So that's going to be referenced continuously. I mean, perfect delivery, right? After clearing a short-term buy side, you're going to get reversion to equilibrium. That's what we see. So now we could actually start running again potentially. Still a lot of equal highs, relative equal highs. So if you want to keep pushing up slowly, that makes sense. For me, I like the idea of waiting until we get up here, and then I will look to short something. Nothing in here has my interest at all. We'll follow it, we understand what it will do, but as far as putting risk on, I'm good on that. So original buy side, perfect tap. Once again, we're going to watch this little fair value gap. Choppy markets, that gets inverted. Reversion to equilibrium again, potentially. If we do get below that fair value gap, we would look for equilibrium right away. NQ could hold as well. For me in these markets, right, like I'm not, as I said, if we're in the middle of the range, that's just really a no-go for me. That's more so forcing an entry. Could work out though. I'm not saying it couldn't. It's just I've gotten very picky with when I'm trying to enter. Just because I could see the setup doesn't mean it's going to be highly probable setup. Because NQ kind of in the same spot, right? Like a lot of first percentage in here, pretty much 3 all inside of 1. This type of delivery I'm never really a fan of either, right? So when you put in the original low and you don't clear that low at all, because now you have higher low, right? Higher low, higher low. That's very easy to fall right through low resistance liquidity runs and pick up all those lows. So yeah, to me, nothing really. Not interested at all. Do I play hold them? I do not. I did when I was, I guess, younger with like my grandpa and my older uncles and stuff, but never like too often or anything like that. 21 every now and then. Blackjack, I guess they would say. But no, not really a card guy, to be honest. Or a gambler. Like, I've never really been to like a casino or stuff like that. I feel like it's rigged against you. I'm gonna lose. Okay, so there's first percentage. For me, still really not like, I'm still not really interested in that at all. We need to come up here. We need to see an extension of this range because we still have all these highs. So unless we were to leave the actual range high, I'm not looking to do much. From here, I would expect, once again, hard rejection. That's the first presented from yesterday, so that's going to be a key area as well. Reject from that new day opening gap. I would like to see the actual midpoint of our opening range, which is why I'm wanting to see the 1 hour be hit. So we said so far, consolidation at equilibrium. Quick run into buy side. We actually do hold a discount there now, so today's first presented. And now we are trying to make attempts higher. Once again, though, even in ES, right from this original low that we create here, higher low, higher low, higher low, another higher low, right? So if we do hold again higher low, those are just those runs that we're not really wanting to see because those get easily cleared. If it's going to deliver like this, you would need to see breakaway gaps being formed. And because none are being formed, that just means we're going to continue to put in higher lows if we do hold. But I would expect more so something like this, right? For price to fall through these lows. At this point, look for a reversion into the equilibrium probably. We will watch this just to see. Right, it holds us once and it runs us into buy side. So as we invert that, we would expect that acts as an area of resistance. Volume bounce here. Kind of want to see if this would be a volume bounce entry. So as we tap this candle's closure, interested to see if it wants to reject or if we just, right, pretty much negate that volume bounce. If we open bearish and then we end up negating that, that's more bullish. and we would look for that to hold. And this to just be those high resistance liquidity runs. We were able to pick up these equal lows, but even this now, right, high or low from here. Trend line liquidity, we call it. Oh, excuse me. Do you play Hold'em? We got any Hold'em players or what? Brutal. Okay, so that's kind of what we would expect, right? Makes the wick higher, holds the actual fair value gap. Used to play on I love that. Now I feel that like mini clip. Actually, now that you say that, what game was that? I did used to play that all the time in high school. Unlocked memory. I forgot about that. Like Zynga. Oh, what was that? Now you're gonna make me think of that again. Zynga? Zynga Blackjack on the phone? How was the beach? Oh, it was a good time. I'm not gonna lie, right? I'm not really a beach guy. That's more my lady. The golf was awesome. Huge golf, dude. But for me, the beach, a little boring, to be honest. It's just empty water, you know? Much more of like a lake guy. I like the trees and the mountains surrounding the water. That was my ringtone, yes sir. Can we just talk? My boy Khalid, what you know about that? What would be first presented on NQ? I'm looking at that right now. First presented would be, let's see, that's a little small for me. I would label this one here. So I like to have at least 4 ticks, 1 handle. This one's a little too small. This is what I would institute as my first presented here in NQ. 930 I wouldn't count because we didn't clear any type of liquidity or anything. This one I would count, especially because it runs us into sell side and then we invert that. So for me, first presented would be here. But as we said, once again, that stair step of delivery easily could run right into this low. As we said, we expect that in ES as well. Anytime we clear a high, I mean, just notice, anytime that we ran a high, it's always been a wick. So we have this high, we run it, it's a wick. Right, even here, wicks. We have these highs, we run it, a wick. We have these highs, we run it, it's a wick. Into the range. We have this high, we run it, we wick right back into the range. So I would expect after the buy side, as we say, in consolidating markets, when we hit short-term highs within the parent dealing range, price will make an attempt to return into equilibrium of the actual parent range. So it can get a little tricky if you're unfamiliar with how that's working. But that's kind of that's how we look at dealing ranges and kind of like the PDRA matrix with the highs and the lows and whatnot. Yeah, that is fire, bro. Better, that's a big one. But you know, talk just makes sense for the ringtone. Someone's trying to talk to me. But I do love better. Just a huge Khalid fan. That's actually what my 21st birthday. Went to Red Rocks, little backstage pass, Khalid, me and my homies. The sand kills me. I feel that. That's true too. Sand. Yeah, because like you get wet and then you get sand, so it's just sticky sand, bro. Like, that's not fun. That's not fun. And then the beach is always humid AF too, so I'm like, bro, come on now. But it's alright. It was a good time. Optimist. Sunshine. Nice breeze. So we did get back to the, no, we didn't get the 5 minute. Did we get the 1 minute? Just short. So I don't honestly expect this low to be cleared. Same idea, right? This, what we call that phantom trend line. So we see this, like retail would see this as a bullish trend line. You're trying to buy. We like these to be cleared. So we don't use them for that aspect. We use trend lines to target that liquidity. In consolidations though, to be honest, that's really when these retail concepts work, because it just holds that range. Like, what's that called? Like a channel, right? For sure. Whatever retail be doing, they could do something like this. Buy the channel or whatever. We're just in that. So So once again, let's see if we run a high. For me, I'm still not doing anything until we get up here or we fall all the way into this. We could stay in here all morning. That's a no trade, right? Where there's no need to force. If you're looking to engage, I would do it in the safety of a demo to just get familiar. Very low probability condition here. So original buy side, once again, right? Every time we've hit that, we've kind of gotten stuck. I mean, look at the body there. We're still in this range. See if we can get outside of the range at all. If we can, maybe it'll give us another run higher. And then we could look for something short. Maybe if we can get up there at 10:30, a little bit after 10:30. So at this point, I'm just trying to see if a candle will close above that original buy side. To me, if it does, that should set into motion a run on some of these highs that we have over here now. Right, so kind of like we have this one. And then these ones over here would be the two that I would look for. This high, right, look where this high, oh my. So we have equal highs there perfectly, which is what I would look for. So now that we have closed above that, but we open with the bearish volume balance right on that original buy side liquidity. So this is what we mean when we say that this candle can negate this candle if it was to close back underneath this buy side. Because we try to close above, price immediately snaps right back into the range high. And now if we close back inside that range, we would expect for price to start wandering lower. If we really want to remain outside of it, this bearish volume balance here will be negated. This candle will also close above the high, and then we should run into the equal highs here. We have another high here, as we said. For me, this is the only area of engagement, so I'll wait until price gets all the way up here. It's a very interesting emoji there. Can't say I've seen that. Are those cats? I think those are cats. So those are equal highs. As we said, closing above twice, confirmation. So now we could probably get the run. Let's see. All right, next objective would be here. Let's go like this, actually. So we want to see this one. And then ultimately for me to enter, I want here. Because then that would also be midpoint of our opening range perfectly. That's also why I'm doing that, right? When these areas overlap like that in choppy markets, those are my key areas in price that I need to wait for. So the higher time frame, time-based PD arrays. Right, we have our new day opening gap high. We have the 1 hour fair value gap low, and we have the opening range gap midpoint. So I like that area in price. Well, inside yesterday's first presented, we'll see if we can't push through that. Why is that the only area? Because I don't want to be in the middle of the range, right? So like, as we said, we've already marked the parent dealing range high to low. So as we come into the morning, this high and this low is the actual dealing range that we're within. Because right, we make that run lower, we retrace up into a premium, and then this run clears out all the sell side. So after we make this range, we just consolidate within it for most of that night and heading into the morning. As we said, we then run the low of that range here once, and then we make another attempt twice, clearing the actual low and reverting back inside that range right into its equilibrium. So already we're expecting the high because we've cleared the low, and in a consolidating market, the opposing liquidity will be targeted. So that's why I would want to see that. And as far as me waiting, it's simply because anything inside of this is just going to be low probability. Like, sure, you can find setups in here, but as we said, over time, the more you try to find setups in this type of condition, you're just going to burn yourself. So for me, I have clear-cut kind of barriers for entry, to where if my expectation is we are going to continue to be range bound. Let me move this real quick. So, I'm busy. But if my expectation is that we're just going to be range bound, then the extremes of the ranges are where the best setups are going to occur, not the middle of the range. So it's simply following, like I'll follow price in here and we understand what it's doing because we could read price, but I have no interest in putting capital behind that or putting any risk. Simply because you don't even need to trade. You don't need to be involved in every move. And if price did trade up into this and did something crazy and ran and just kept running, then I'd probably just miss that, and I'm fine with that. Right, day trading is not everyday trading. Sure, we can do that, like we have the skill set to find opportunities. But at some point, you just realize there's really no need. I like the highest probable setups for me. Cool, so we do get that buy side as well. I like that run. And I like that we actually did leave all of this behind now. So for me, yeah, I'd rather look for shorts at this point. So we'll see what we get inside of here. It could be a few different ways. Like we could do a traditional YouTube model, potentially. We may get something to where it's like an inversion. So we get the blast through and then invert a fair value gap, which would allow entry. For me, best case scenario would be we hit that once, we give a retracement into a discount. We actually make another attempt to run out that high, leaving some type of discount here aligned with the actual 1 hour's low. And then we would invert that. And for me, that would kind of be entry. Here, trying to use the 1 hour's low, midpoint of our opening range to take it back into probably like equilibrium, at least a 5 minute. So we'll see. And if that doesn't happen, as we say, and we just keep trading, get this off here, and we just keep trading higher and higher, I'll just miss that move. So leaving a fair value gap aligned with a buy side pull, that's bullish. So I do like seeing that, because then if we can invert that, that'll give us added confirmation that we can run lower. So there's the first tap of the midpoint. To be honest, I wouldn't even mind something like this. This is what I would call a high risk entry, because you don't have any confirmation. But I like that. Like that would be like the first entry if I was going to force. So as we hit that, just get short immediately, expecting this level to be where we want to resist from. But as we said, for me, the confirmation entry would be create this swing high. So have this swing high hold, trade back down into this discount, respect the actual discount that's here, and then bounce to actually clear this high again. And then from there, we would look for a true break in structure. Or if we left like some type of fair value gap in here and then invert that, we could use that as the entry. So that would be my expectation. Let's see. Swing high is in place. Let's see if we can't hold the buy side. If we fall right through that buy side here, that may be all that price needed to do, to be honest. And we may just fall straight down. But I like the idea of holding that short term, or creating the short term high, holding the discount, running the short term high, and then getting the reversal. Okay, so there's that 1 minute discount. From here, I'd want us to hold, make another attempt at the high. Midnight. Okay. So far, so good. Win rate and average RR. Average RR would probably be 2. Win rate right about 70%, 75. Most trades when they're actually framed are about a 1 to 3, but because of the way I partial, right, if we take the full kind of partialing and the actual TP, it works out more towards like a 2R. That's really changed over time. Like earlier, I'd even say 2 years ago, it was more so 4 to 5R with a lower win rate. But as we found ourselves in these choppier conditions, I'm just not really looking to hold for moves for that long. So I've gotten a lot more nitpicky, right? A lot more base hits, higher strike percentage with lower returns, which to me I like better. Yeah, we have. Oh, that's funny. I just explained that. But yeah, right. That works a lot better in trending markets because you can kind of weather some losses and those large wins will make up for it. But like these type of markets, right, you get kind of burnt doing that because sure, those runs do come, but more often than not, you're not getting large trending moves. Can all-time high come from here when the day closes? I mean, that would be crazy if I'm being completely honest. Maybe, like that is what our objective would be, right? That's kind of what our macro stance has been this entire time, is higher prices. I'm not sure if it would just gap there like that though, to be honest. That'd be kind of ridiculous. Especially with the whole war nonsense. If anything, I see a gap lower. Because what, like this is all, let's hide everything real quick. Look at the last like few, holy Jesus, right? I mean, really since we put in this low. So the last month, just straight absolute chop, right? Disgusting. To me, that would be an easy run on lows or highs. But I would almost favor lows first. Just gross. Just gross. So we are unable to get that high again. As we said, that may have been the actual entry there. Just the original short as we trade up into the 1 hour. 5 would already been good. We'll see if we can't hold this little area. Because that might be... I just don't really trust that, honestly. Like, I feel like I'd want another run on this high. If we were trending or something, right, this... I'd be entering here on this original buy side like this. As we said, because we are a little bit uglier, I do just demand more from the entries themselves. So I'd actually still wait for another attempt at this high. And if we hold from this little fair value gap, right, and this setup does hold, we'll just miss it. As we said, don't need to be involved in every move. We understand how price will deliver so we could follow it. But for me to actually go short, I don't want to see this high one more time. So we'll watch this little area. You're currently in the low win rate and high RR. It seems like a lot of the more successful traders are more... Yeah, I would agree with that, man. And that's something that I've learned over time as well, in experience. And I think that comes from, at least for me anyways, like my thinking was I needed higher moves because I felt as if I couldn't be consistent in my understanding of price delivery. So I would aim for higher moves or just higher RRs. That way I didn't have to take as many trades or I didn't have to win as many trades, right? Because you think if I have a bigger risk to reward, I make more money per trade. Whereas now I'm a lot more confident in my understanding and ability. And I know that I could pretty much find a setup in any type of market. Since that's the case, I'm fine taking lower risk to reward because I'd rather just get consistent wins than try to get like these windfall victories. And yeah, I'd agree. Most traders tend to, that's like the natural progression. Is that as they get better, as they actually start making more money, their risk to reward kind of drops and their win rate increases. Because you realize you don't really need to have large winning trades to be profitable, right? It's more so the consistency of it all. Like for me, 1-to-1 is still pushing it, but I'm even like 1 to 1.5, I'm fine now. But to be honest, like 1-to-1 is fine. I used to say it that I wouldn't really aim for 1-to-1 and that you shouldn't do that, but knowing what I know now, if you truly can have a high strike rate, 1-to-1 is fine as well. So another thing that we would expect is after running out buy side, we get consolidations at the original liquidity. So this is the original buy side, but reverting back towards that. As we said, for me, I'd want to see price actually run this high first before I look to short. So I wouldn't be shorting this right now. As I said, for me, perfect scenario would be like to hold from here. As we break this high, it gets broken with some type of fair value gap there as well. Right, so like if we could leave a fair value gap in here, and then as that would be inverted back on the way down, that is where I'd feel comfortable shorting. Also good because we do have a first presented here, so that's yesterday's first presented. I'd like that to hold. Get us up into that one more time. Original buy side though acting as a pretty strong area of resistance. It's paired with that bearish fair value gap. Closed above it once, which to me gives a kind of like a slight indication that it actually wants to get above that again, which is why I'd want to see this be the low that holds. No problem, Steven. Take care, brother. Hope you found it helpful. Catch you again tomorrow if you'll be here. So consolidation taking place at the original buy side. Just trying to break down the anatomy of these ranges that we're within right here. Okay, so yeah, we should get there. I'm trying to see where we have overlapping key levels. So that 0.25% probably will be tapped again, actually. Of the morning range opening to high. What up, Mike? How you doing, my guy? Okay, so I wouldn't mind, yeah, returning to that. This is the quarter level of the current range. And then that's actually a midpoint of our, where 930 is opened up to the high so far. So kind of the morning range itself. That's what I was also overlapping, right? So the 930 open to the highest high we've created. That midpoint is exactly the same level as the actual upper quadrant of the parent dealing range that we are within. And that's why I would expect that that level probably will be tapped again. I'd want to see that level hold. So I'm using that as kind of where I'd want to find support if we're going to run out a low again. And we still want to see this high be cleared. All right, so for me, still the same idea. Sitting on the hands until we can clear this high. That would have been like the original entry, as we said. That would have been the high risk entry, so you can enter just on that, expecting the consolidation to continue. Probably would have closed at 5 handles, however. But for me, I just would rather try to have some confirmation. And that would come in the form of now running this high again. And then creating some type of short-term setup that'll get us lower. As we said, if we just kind of stair step from here now, if that does end up being the high and we just do this delivery back down, I'll just miss that. And I'll be fine missing that. Is your full name Mike Ott? No. Oh, I think you're acting him. My name is not Mike, if you were asking that, though. Mike Jones. So we'd want to hold this fair value gap here. Yeah, that'd be nice. Hold the fair value gap. Get above the buy side. Maybe bounce and use it as support. Clear out the short-term high. Ideally within the next 2 minutes, because then that'll be like the opening range high at 10:30. That'd be best case scenario. Maybe we won't get that, but either way, if we can clear the high, get that retracement, we'll be good. Gonna move this buy side because we know it's the 1 hour low. I almost want to soup that. What is this looking like on a 5? So we have a inefficiency. What about a 15-minute inefficiency? Is that a breaker or a mitigation block here? Mitigation low. I like that a little bit. Consolidation. $10:30 now. Still inside our first presented as well. That's why I have this fair value gap keyed up. Because not only is it the fair value gap that kind of creates the actual true first closure above a swing point, but it's also paired with yesterday's first presented to a T, right? The low of it is the same key area. So that's why this one becomes important. Hey. 15-minute wick. Yeah, that'd be good. Pretty much aligned with midnight there, the midpoint of that. So midnight would be a key area to look off of. What up, Darkly? How you been, my guy? He said, what a clean delivery, DXY. Yeah, to be honest, we've kind of thrown DXY out the window the past few months. We used to use it quite a bit for confluence, but now it doesn't really move. Like, it would move separate of what the indices would do. So like if we saw dollar rising, the indices would be falling, right? But really the last few months, that has not been the case at all. Dollar's been moving on its own. The indices have been moving on their own as well. But I mean, that's kind of why I would still favor shorts, right? So like with that in the back of our mind, if the dollar is going to run like this, and it's just going to pump, and we're going to be stuck in a consolidation here, as we run out this high, it should give us an opportunity to try to short. I really am thinking about just turtle soup in this, if I'm being honest. If we can hold this low, I would like that a lot. Because all of this in here, right? This is that delivery where there's no real inefficiency, no liquidity. Yeah, on the 5-minute chart, right? No inefficiencies in here. So that'd be very low resistance. If we were going to run that on a 2-minute, low, higher, low, higher, low, higher, low, higher, low. Yeah, I would favor that actually. I think we will try that. Let's see that. Let's try a little turtle soup. So that'll be, stop loss for us is going to be, so now we would go over here to the left and see where would price want to hold. So we have the actual 1 hour. I wouldn't expect the whole 1 hour to be traded into. Within the 1 hour, we have this 1 minute. We have the breaker here. Volume imbalance. So actually, the quadrant, the upper quadrant of that. It's a little low for my liking. Yeah, I like that. I'm not really too worried about that, honestly, right? The consolidation, the overall market narrative will outweigh the actual candlestick delivery. Ba-da-ba-ba. Hey. Mm-hmm. Boom, 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 boom. Da, 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 da. So far, first presented, holding nice. So yeah, that'd be cool. Because then we consolidation, right? Consolidate, expand, ugly consolidation, expansion, consolidate into the reversal. If we broke through this low first, I wouldn't really like that though, because then we may miss this. The original buy side is going to be the area of interest that we speak of, right? That's kind of where price will try to fall. Ooh, let's just hide the indicators. So price will try to fall from that original liquidity as we trade up into it, especially because it was paired with the 1 minute fair value gap. So that becomes an inversion level as well. So inefficiency inversion paired with buy side, very key level. Falling through now, first presented from yesterday. So closure below that, we may actually get the return back just into equilibrium. And as we said, miss that entry, which is fine. Understand that's probably where we'd try to hold. I like the idea of trying to get up into the buy side where we're going to short. So my entry now there is taken away. And I'll wait for the actual confirmation. So had the short. Instead, we use the original buy side. So just miss it by a few handles. Right, we're going to use that instead. Run the short-term high. If closure below this first presented, as we said, I would expect pretty much just a return into equilibrium, which would take us into this low right here. That could be a sell-side target. For me, though, I would still favor shorts. So if we can hold from here and make another attempt up into the highs, I'd look for that. But for the time being, if we miss the run lower, as we said, I'm fine missing a move today. Don't need to be involved on every swing. So now we'd watch the inversion. As we said, that's going to be an actual 1 minute bullish turn bearish paired with now the actual first presented being traded below. Should be a pretty key area to hold price lower. Now, if you're someone that wants to have a little risk or test this, I wouldn't mind that. Right, and really this high should be the protected high that touches the buy side if we're going to come into equilibrium. So something like that. 1 to 2, easy. Nice and easy. Yeah, the original low here really should be hit. You said either direction, you want to get the parent range. So the current low and the current high, those are the best opportunities to look for entries. So if we're going to revert into the low, all the way back down to the low of that range, especially the 5 minute as we displace back inside of that, that would be the kind of the key area. If we're going to stay in the range, this low will be protected. Oh yeah, okay, so perfect right there. Perfect redelivery into that, right? If we're gonna stay heavy, we'll fall. As we said, this is equilibrium. Choppy markets, we would look for that retracement into equilibrium paired with the low as well. So it's sell side to target. And that's the equilibrium from, right, the current like this one here. So we've already cleared the high and the low. If we're going to take the actual leg itself, we could look from this low here. So the lowest low up to the highest high, that midpoint would get us into the low of the 5-minute. So either way, that's kind of why I have this low keyed up, because that's going to be the sell side there as we head into that area. Sell side, sell side. And yeah, we do have that fair value gap there. So as we said, I wouldn't mind if you're going to try to do that. Something like that with that high, trying to be the protected high to target, right? Even 1 to 2, we're just into a low. As you say, if we're going to actually hit equilibrium of the whole range that we're in, so from this low all the way to this high, that equilibrium is actually perfectly the 5 minutes low. So there's the first true test of that. First presented inversion. We fell short of midnight, so now we're going to have a swing low right near midnight as well that could set up a nice run lower. Right, usually midnight's going to be a pretty magnetic level on price. We've created sell side just above that, so we have sell side to target as we revert into midnight. I'd really like to see almost another attempt at this buy side though. Make another pass, leave that low, give us a short up here at the extreme of the range. If we just keep stair stepping lower, that's cool. What do you think about the 15-minute fair value gap bullish? So to me, I don't even see that, bruh. I mean, this one is really the only one down here. Either way, if that's the one you're referencing, I wouldn't mind price going down there, because if our expectation is equilibrium at least, maybe we can get a little bit deeper into the 15, which is here, the 1 minute paired with that. That was kind of our original objective, right? We said that we could either run into the buy side, or if we're going to go lower first, we would look for the 1 minute, and that's overlap with the higher time frame 15. So I don't mind that, but for the time being, midpoint at least, as we said, should hold first presented more than likely at this point. Now that we've tapped that buy side and displaced back below it, if we're going to want to revert into equilibrium, this would be a key area to kind of reject from. Cool, okay. So we do hold that. Should attack this low. Just short of it, should get that. Relative equal lows. Would expect the heavy delivery into that. Equal lows now, perfect equal lows there. So just playing around at that liquidity. Should run that, not convinced. Inside of a fair value gap, however, the original one. I have this one marked because the consequent encroachment is the midnight open. So I'm kind of like in choppy conditions. This is how you can go about finding which fair value gaps are really the important ones that you should have, right? Because obviously not every fair value gap in here is something that we should be focusing on. So you want to find the ones that are anchored to higher time frame reference points, time-based PD arrays. Right, so as I show you, remember, midnight level here, oops, midnight level here, this 1 minute's fair value gap consequent encroachment, same exact level. Right, so that's going to be a pretty key spot. As we said, we should attack those lows. This is simply just engineering some liquidity as we trade into midnight. So as we tap that consequent encroachment, I want to see what happens there. Fall through that, we should keep retracing into equilibrium. So this low I like, 5 minute low potentially as well. We held nicely from there, and right, that could be all you need. Like, you don't even need to aim for anything crazy, as we were saying about right there. So you were just trying to get 5 handle ends model. I would like, obviously, here, because we should continue to fall, especially if we close below consequent encroachment. So that's the key level I'm looking at now. I want to see what consequent encroachment does. That's the midnight level. To me, this is where we would hold support if we're going to make another pass at some highs. We'll escape the range, we'll clear the buy side, we'll retrace into the midnight level, power of 3, and then we'll hold midnight and make another attempt at buy side if kind of that's the objective. If not, honestly, we should probably hold the original first presented. I know we have a fair value gap in here like this, but this is kind of where I would disregard the 1 minute candlestick itself and rely more on the time base. So the first presented from yesterday. So like, say that we did get up and through this, I still wouldn't be thrown out because I would think that we could hold from this first presented. Like, if we're going to honor order flow, yeah, this 1 minute will hold, but just kind of explaining if we paint outside the lines, not to completely abandon the idea, because these first presenteds up here could still hold price, send it lower for another leg. Equal highs, so we should get up into that. I'm not going to mark it, but we see it there. If we leave that as a breakaway and just break lower, that'll be actually pretty nice for the shorts, because then we should just run into sell side, leaving that as a breakaway gap. Right, notice where it's getting formed. It's the original buy side. That's kind of why I would expect that if we're going to leave it, because we've already spent a lot of time up and down through this level. So if it truly does want to kind of break, it'll leave that open. Retesting midnight, retesting fair value gap. To me, anything below consequent encroachment will send price lower, so it wouldn't even really need to close below the fair value gap itself. Closure on midnight, so body's telling the story. Body's making an attempt to continue lower. Simply waiting to see now, does the high of the 1 minute offer us any type of short-term resistance? Are we going to try to immediately rebalance this? Or we're going to try to make another attempt to come up into some inefficiencies. As we said, if we truly are heavy and we want to attack this sell side, in my mind, we should leave this as a breakaway until we clear a low, at least. The original buy side. If not, we'll just come at... Geez, that's ugly. So no inefficiencies on the way up or down here, right? If we were to hide this, hide everything. Really, since we opened at 9:30, not one fair value gap up or down. So that's pretty much textbook consolidation. We do have that inversion, right? Or the volume imbalance. So that's why we're holding there on the 5 minute, which is nice. As you said, midnight going to hold. If midnight wants to hold bodies, this is where we're going to hold from. That low becomes protected. Midnight does not want to be breached. The wicks go perfectly into the 1 minute displacement above. So now if we want to maintain bullishness, we would look at this last down close candle here that was formed as we're leaving the midnight. And we'd see how does price react here now. If we want to start attacking some of these highs, this sit here, hold us. Oh, for sure, yeah. Right, for me, like I said, I'm not doing anything until I'd want to see this high get ran, and then I'd look to short from there. We understood, however, that this was a good short with the original buy side. But for me, I just need more demanding entries in choppy conditions, right? Very improbable conditions. And I'm from runs like this. Especially when you're already up on the week, right? Like yesterday, 1 for 1, one and done, easy win. So I'm not in a rush to go and give it back the next day in a choppy market. So we left a fair value gap there too. So that's kind of those OBs that we say are higher probability. Had this ran out a low, I would trust this even more. But we already ran out a low, and that's the midnight. So yeah, we really should, if we want to maintain bullishness now from here, this down close candle should hold us. start attacking some of these highs, what we would first look for, right, is you want to get above the first presented so that I'll reclaim this 1 minute bullish and it'll break structure. So now it's a break in structure paired with an actual inefficiency that can be used as a discount, right? That's bullish. So at this point, we're watching the high. Let's see. As a matter of fact, this fair value gap is also the high of that. So that's pretty interesting. So we could just leave both of these, because this inefficiency is the low end of that first presented and this one is the high end. You see that, right? They're sharing the same levels. So the high of it and the low of it. And then the hidden volume balance is right in the middle. That's actually so beautiful. Just those algorithmic signatures that we speak of. Hard to miss. Hard to argue against anyways. So first presented, as we said, we can close above this and still break lower. That's why I'm not fully convinced in the longs quite yet. This is where you get thrown off if you're purely trading the concepts just for the concepts themselves, right? Like, yeah, we closed above this, so it should act as an inversion if we want to maintain bullishness. But to me, the overlying objective from this first presented will be to send price lower, right? So that's kind of the priority. So I'd need to see the first presented give way for me to trust that we actually can make another run on some highs. Because all of this could be simply a run up into the first presented followed by another crash lower into equilibrium, as we were talking about. So now that we have rejected from there, this is where we start looking at now the discounts that we've marked, and we want to see what type of interaction do those give. As far as priority of the PD arrays, that's kind of where that PD array matrix comes into place. First presented is going to have higher priority than the actual candlestick OB. Midnight is going to be key as well. So to me, right, we're stuck between the two time-based PD arrays in the form of our first presented from yesterday and the actual midnight level inside of this fair value gap. So we can see some type of consolidation within here now. Okay, so the OB, if we want to maintain bullishness, as we said, what we really want to see is for that to hold and this actual bearish volume balance be negated. We open with the bearish volume balance as we trade up into that area or down into it. So for us to kind of trust that we can now run, we'd want to see this be closed in bullish. And then we'd want to see price now make that attempt to get above the first presented after respecting the discount here. As we said, that will be the protected low in the swing because that's the midnight level. Candlesticks can't run that low out, so still respecting midnight. And now we make that run higher. But for the time being, just stuck between those now. Midnight and first presented. Move that. We understand. We're looking at the down close candle there. Just keeping it a little clearer. So honestly, the same idea. Like now, let's say that we displaced above the first presented. This low should be our protected low as it trades up into this discount here. And honestly, I wouldn't mind. Like if you were going to try that, I wouldn't mind something like that to get the buy side. Cool. So as we said, that's kind of what we would expect, right? Displacement through the high. We want to see what kind of close we get. We've closed on the high. So to me, that's bullish already. That'd almost be the flip point. So now I want to see the low of that. What we'd really expect, like if we left that fair value gap right here perfectly aligned with the reclaimed bullish, that'll be a pretty key area for entry. So watch this. Like if we end up leaving that, we don't. Immediate rebalance. Okay. So still not convinced, to be honest. We need closure above. That's the only thing that really will push this. This is going to be very high resistance. You could already tell. But to me, I'm not convinced that we're going higher unless we get actual closure above. All of this could simply be retracement to then fall through again. First presented still holding. All right, need first presented to give way. Thanks, AA. Appreciate it, brother. Spent a lot of time on these charts, man. We were in no life for many years, huh? Well over, honestly, probably 20,000 hours. How many? Let me look that up. How many days is 20,000 hours? $833 days. Okay, hold up. That's what? How many years is that? A little over 2. $2.2 years. I could see that, to be honest. Yeah, 20,000 hours, I believe. I probably have like 20,000 hours. Yeah, closure above would have been nice, right? That's like that damn flip point there. That first presented is going to be tough. It's also a new day opening gap. So when you have overlapping, as we often say, where these actual PD arrays overlap, and you could see that here. So not only is a 1 minute bearish, it's the actual high of the first presented, and it's the low of the new day opening gap. That's this one area in price. That's why we see price hold that so beautifully. Perfect. And now we've broken lower. So as we said, to me, that's going to be bearish. First presented is the flip point. As long as we're below that, another low more than likely. Midnight still has a chance though. So as we say, we're kind of just bouncing between those two key PD arrays. I'm interested to see, now that we've left this volume imbalance open here, if we're going to start going lower, this will hold the candle body. So we're going to wick into it, but if the bodies maintain that and stay below that, I would actually look for another run lower. Got stop profit, that's fine. Yeah, like this would be, like if I was trading in the middle of the range, this is kind of where I'd be very quick to break even. Or like you say, move my stops. But yeah, for us, we'll probably, it looks like it'll probably be a no trade morning, to be honest. Give one nice setup here. Understood it, simply just was kind of demanding a little bit more. So we had the turtle soup up here to try to get that short for this buy side. Instead, it just used that buy side. So I missed it just by a few handles. No big deal. Still maybe have a chance if we can get into it by like 11. But for me, I don't really like entering anything after 11. That's kind of my window, right? 9:30 to 11, and then the afternoon. Choppy mornings will tend to lead to a little bit nicer delivery potentially in the afternoon. So that's something we could look for, but as I said, I really do think the whole war nonsense is going to cause a lot of uncertainty. And I'm not really someone who relies too much on technical analysis, or fundamentals analysis. But when you have something that large, right, a war, if you're in war talks, that's going to be an issue. Rest of the week will just be normal. Wednesday, Thursday, Friday streams. Based off news, of course. So we can take a look real quick just to see what high impact news we have the rest of the week. But yeah, we'll be here every day the rest of the week. So tomorrow, because we have FOMC actually, so like tomorrow will be a afternoon stream. And then Thursday and Friday will be the normal stream, but tomorrow we'll wait until the afternoon because we have FOMC and I don't really do anything before FOMC. That's also why we're expecting consolidation, okay? I should have mentioned that earlier. I was thinking about it, but I guess I figured it was like common knowledge. But if we're going to have FOMC, price is going to consolidate before that because FOMC will tend to sweep liquidity in both sides. So you get consolidation heading into FOMC, pair that with uncertain world relations, pair that with a multitude of time-based PD arrays in one area, and you see why. As we said, volume bounce there will hold if we want to maintain bearishness. And this is where you follow price, but I'm fine missing moves in here. Like, yeah, it's cool to follow it and we understand what we're looking at, but just lower probability. Midnight still holding strong, right? We don't want to get there. I'm waiting for that. I want to see a tap of that. Closure below midnight, we should get sell side in my mind. Like that'll set into motion that run lower that we're speaking of off of the first presented. Retap of the 1 minute. Thursday holiday. It might be a bank holiday actually. What's Thursday? You're probably right. Juneteenth. Oh my god, it's Juneteenth. I'm fake, bro. Come on. Represent my own people. How do I know that? Damn. Uninvite myself to the cookout. I think today, don't trade time. Yeah, right. There's nothing wrong with not taking a trade. Like as you said, for me, the only trade I would have taken would have been this one here. And now I'd be out at the 5 minute. Didn't take it just because we're in the middle of the range and it's choppy, but that is the only true valid setup for me. And why is that right? That's because we hit the 1 hour that we wanted to see. We get back underneath the actual fair value gap as we create, or as we leave, right? If we're going to close above a buy side pool and we have fair value gaps anchored to those buy side levels, those are always going to be key fair value gaps. And those are going to be the strongest kind of inversion plays that you can get as well. So in theory, right, as we first invert this, you would already be fine to try to short that, stop above here. We hold it, we break lower, you go up into again, that's another opportunity. If you miss that, however, as we truly break, right, this is real displacement. That's why I'm saying this would be the only one I'm actually trying to get into, because that's true displacement. This high runs out these short-term equal highs, even though it's very small. It's clearing short-term equal highs. It's returning into an established buy-side liquidity pool. It's holding the inefficiency, and now it's displacing through lows. And that low is paired with the first presented perfectly. So as you said, if you're short, right, that was the key short. Stop above the high, because that high is going to be protected as we return into equilibrium of our range. Look at that delivery, perfect. So we've hit the actual first presented again. Look at the bodies holding that. Volume balance holds us nicely. If we're going to continue with the bearish delivery, honestly, I would still look for volume balance, to be honest. But you could even see on the way down, like, right, the difference between displacement and a run-on stops. This low here, or I guess let's start from here. When we clear this low, notice how it's a wick. Like we immediately wick right back inside that range. And that's why I wouldn't feel safe trying to short as we trade up into that, even though it's valid. Whereas here, when we have true displacement, that's the first time that we actually close below the low with a candlestick. That's the same exact thing that we saw here, right? We said anytime you're going to close above it, that'll set into motion continued delivery in that direction. So as here, when we wick it, that's why we get the retracement. True closure below, confirming market structure shift, paired with the first presented. That's why I would trust that one there. And then you'll even notice, right, once again, when we follow it, when we create this low, what happens when we run that low? It's just a wick. So even now after that, it's still choppy. Same idea, right? Even with this low, as we've cleared this low, what happens? Look at the bodies. Only thing is now we are below midnight. So consequent encroachment of this fair value gap is midnight. That's why I have this up. If we're going to maintain bearishness, midnight level will hold us. So that's what we're looking at now, right? We're looking at this fair value gap. We understand that we've only wicked this low, so it could set up a potential reversal. But if we want to get into equilibrium, we would look for that fair value gap there. Let's hear what you said about the war. Doom and gloom about the US going into X. Maybe, honestly. I don't know, though. Like, that seems more wishful thinking, completely honest. I mean, that would be nice, right? Macro sense. Like, we have longs, calls for that. But from where we are now, I would almost expect lower prices. Because, yeah, those highs are very clean. And that's what we've been aiming for the last who knows how long, months. But leave those highs and then create another fall later to attack those highs after would be the best case. So back above midnight now. 11:01. Yeah, we'll chill here for a little bit, but as we said, more than likely it'll just be a no trade day for us here. A few setups you could have taken, but as we said, is it worth it? For me, not really. I'm fine following it and understanding order flow, price delivery, but no need to actually execute. So now, to be honest, let's see. Clearing a short-term low, holding the first presented, getting back above midnight. I'd almost watch something like this. I like equilibrium, but this could be like a quick counter trend, using midnight with these lows as the protected lows to get up into this first presented. It's almost bouncing from first presented to first presented, right? Being stuck within those little range bound areas. I'd actually watch that, yeah. See if this fair value gap doesn't want to offer some type of short-term bounce up into here. NQ pretty much in the same spot. So it's just chopping as well. It's sitting right at its first presented. Nice, yeah, okay. So we'll expect that. As we said, going to see if we don't want to get up in here. Volume balance, I would expect, could potentially hold from there. If we get above that with a closure, should get up into the first presented again. So yeah, just going from first presented up to first presented. Oh, nice, close right through it. So yeah, should get that. Yeah, if it does get rain, it'll get rain overnight. All the biggest moves in consolidations will come overnight. Don't allow anybody to be involved. First presented there now. Still the same idea. If we can close above, should get up into the 1 hour again. Trending market like this to me would be, you can almost enter on that. Not going to do it. But I'd watch that volume balance. Like to me, that volume balance that's paired with the fair value gap, that would be our new area of interest that should hold us. If we're going to maintain the bullish delivery now. How far would that get you? C5. Get to the buy side. One and a half. Not bad. Still though, we could hold that first presented easily. If we could like close above it and then got a retracement, that's more so what I would look for. Because we could hold first presented again, just fall through this, create an inversion, and make another pass at lows. Just stay within this range, chopping up. Chopping them up. Okay. Let's see if we get above that. Because if we do get above this first presented, I'd actually look for this to become a breakaway gap and use the breaker here instead. Especially if we had displacement. So it really would depend on how the candle closes. But now we're going to have the low up to the high with the lowest low. No wick to the upside. If that gets displaced above, that should hold us to get us potentially into the higher time frame 1 hour up here. If we end up just wicking the high, that to me isn't convincing, right? We need to, as we say, we need to see closures above. So we don't close above. We do open with the volume imbalance though. So if that stays open, that'll kind of be the same. Because then that fair value gap will be here and it'll be a volume imbalance. So that's kind of what I'm looking for to see. If this gets created like this. If not, if we kind of retrace on it, then to me that's just more of the choppy conditions, high resistance. Already the fair value gap is gone. So now you would have to rely on the actual volume imbalance itself. Because even though it's opened above the high, the close is what's important. So right, this candlestick cannot close above its high. If this candlestick also remains below, same idea. Failing to close above highs indicates more so a run on stops followed by the reversal, rather than a true kind of break and expansion. So we'll still watch them. Looks like the volume imbalance. Let's see, we got 2 seconds. Does it snap back at the last second? Nope. So it's going to stay still within this range. So now I'm kind of watching that as an area of resistance now. Like if we're going to want to just run this high, so that buy side paired with the volume imbalance will act as an area of resistance, paired with the high of our first presented fair value gap as well. So this will be a key area, right? If we can close above it, once again, leaving, confirming the breaker, confirming closure above it first presented, then you may be able to get a run up into some buy side again. Also, because right, this buy side is the volume imbalance here. So that's kind of why I'd like, if I was going to try to enter, I'd enter on that. But we'd have to close above, still nothing. Right, so just playing at that high, no closure above, really struggling to get outside of it now. 2 seconds, did we? First time we did, okay. So first closure above, but this candle opens with a bearish volume imbalance. So if this kind of negates this candle's action, that'll just be worrisome. But I like that early indication that we can now use the first presented to send us into some buy side after clearing out short-term lows in here, creating the breaker. Let's see, on a 2 minute, there is a little fair value gap, 2 minute volume imbalance as well. So that's not too bad actually, right? I think we would be able to hold from there and then accelerate up into the buy side, or at least the 1 hour. I'd watch here now, right? That's the original buy side. So this is going to be another key area. We get above that, should continue to run, but this is where the speed bumps will take place. Another volume imbalance, okay. So trying to maintain bullishness. We'll see. At this point, I would expect, like, if we could hit that first presented, to hold in the buy side. Let's see, 2 minute. Maybe we give that one chance. The one trade for today. As we said, we'd want this to be a breakaway anyway. Up into buy side. I don't mind trying one. So we'll try one little, just a 1 to 2. So we're going to try to target the high. If we run into it first, oh well. 0.25%. We're simply looking for another retest of first presented, but this may be all I wanted to do. As you said, right, as soon as we close above, the very next candle taps the high perfectly, perfect delivery, and then boom, expansion. Because that's also the breaker high, also the inversion high, also the first presented. So you see how we're starting to overlap all the PD arrays. Strong reaction there, nice volume imbalance. So to be honest, I'll still leave this here, but we would want to see almost like a wick into that with the body to hold this current volume imbalance right here as we got above. So one thing we look for in bullish delivery is to negate the premiums and turn those premiums into discounts, right? So as we close above this inversion, which was the premium at the time, notice how we're creating a discount in its place perfectly. That's kind of what we expect to see when we want to see these things hold us. The first presented is the first fair value gap that is formed after 9:30. Right, so I have an indicator for it here. This one is for the week. So like the blue ones are the very first ones formed for the week, so every Monday. The dark purple one is from today, and then the lighter ones are from previous days. But these are going to be key areas in price because they're time-based PD arrays that will be dragged out throughout the week, right? I mean, you could see the precision there perfectly. And this is how we kind of go about navigating choppy markets, right? Like if I had nothing like this, there's a lot of PD arrays in here, but having kind of the underlying understanding of the first presented 8:30, just these time-based PD arrays will allow you to see through the smoke. And this is why we can be pretty precise with the fair value gaps we're looking for. Yeah, in basic sense, just the first fair value gap formed after the 9:30 opening. And you could drag those out throughout the week, and you'll see how price reacts to them. So as we said, I like this entry here. If we do want to actually maintain bullishness, it'll hold from here. But for me, like that's like 3 handles, right? So it's not worth the entry. This is where we would just follow price, understanding that premiums turned into discounts with new discounts formed in their place are going to be a pretty key area in price. So it'd be one thing to just reclaim this as a bullish fair value gap, but to actually reclaim it while printing in this chart of volume imbalance, that's why we say this will hold us and accelerate us into the 1 hour, overlapping and stacking the PD arrays. So we wanted to see a deeper retracement. We understand that's probably going to hold there. Once we hit buy side, we'll call it a morning. At this point, I'll still leave this here because we could run out that low, but more than likely we'll just accelerate into that. Boom, right through it, and it closes right on the high. That's beautiful. Okay, so we're fine with that. That would have been our turtle soup, to be honest, but after the trade window. So from this point, I would almost expect a breakdown for price to retrace on all of this price leg. So like how you would interact with that, we could actually wait and see. Like say we left a fair value gap in here. If we invert that, that'd be a short. Or this, like if we get back below that, we could use that as a potential area to short with the stop above the high to get back into the range. Okay, so pretty much what you would expect from that reaction now. As you said, let's see if we invert that, because if we do, we could maybe try that. Just to get back into the range here. Straight back into it. So yeah, the soup would have been the entry there. Nice. We're already back in the first presented, so for us, we'll be done here. Because that would have been the target. Right, you go from buy side just back into the untapped inefficiencies. After clearing buy side is when price will retrace into the open inefficiencies. As we said, that'll be a breakaway gap if we're going to hit the buy side. Stays open, perfect delivery, perfect rejection, sharp fall. Love to see that. So yeah, we'll call it there. For us, no trade. Right, that's not because, I mean, in theory, we really did follow this entire price delivery. Right, so we're not confused at all. It's just, I have very clear-cut areas of entry. And just because I could see what price is going to do doesn't mean I always need to be involved. Right, I've learned that over the years. Cool. So yeah, for me, my now expectation would still be here. We fell short of it. Now that we've actually cleared that high, that's when I would kind of expect the retracement. I'd look for like off of this. As I said, if we're going to come back up into that, I'd expect that to be an inversion, the original buy side pool. Maybe we want to use the hidden one here. But if we're allowing a deeper one, I'd see this up here as kind of the key area price returns into, especially if we left a fair value gap. It looks like we might want to leave an actual bearish fair value gap created there as well. Which if we did, just another confluence, right? Stacking those premiums here. And then bang, bang. Yeah. That's as we say, if we're going to run out the buy side, we hold the bodies pretty aggressively. The actual discount that holds us as we run up into that buy side, if we can now trade below that, that's when we trust those as potential inversion areas. So discounts that hold us and send us into liquidity, if we're going to negate those and trade below those are areas of interest. And that's where we would now expect price to act as resistance if we're going to trade up into that. Right, pair that with the bearish fair value gap, the original buy side pool, and the volume balance. We would want to see now as price trades up into this area if it's going to offer us any type of resistance to continue to deliver lower. One thing to also watch for as well is that we didn't actually trade into this inefficiency here. So now when I see that, I'm even more keen to trust that an area like this will want to hold price because we have these open inefficiencies now, and we've created relative equal lows just above that inefficiency. So now if price wants to pick up liquidity while also returning into an inefficiency, it's going to be able to. Right, conversely, if we end up negating this as kind of a key area because we are holding our first presented, if we can invert the buy side, then we would just look for a continued slow grind higher. But I would favor another run to try to get into the inefficiency. But mushroom IC, what is that? Never heard that one actually. The mushroom. What the? What is it, like 11:30? We're just chilling at this point. We got nothing going on. As we said, we would expect really the volume imbalance because it's paired with consequent encroachment. So now that we've hit that, if we're going to close below, we're going to want to hold this, right? We're going to hit that fair value gap. We're going to break below, especially if, let's say we leave a volume imbalance here as we're leaving the inefficiency. That's how we can kind of use the confirmation. So once again, if we can create new premiums that are aligned with the original premium that we're within, that is stacking those PD arrays. And if we already have the expectation that this open inefficiency here should be targeted with the equal lows, then we would expect that the volume imbalance remains open and then it can be used as an area of resistance. But for us, as we said, it really should just hold from the volume imbalance. So now that we've hit midpoint, that's where we'll see the fall off, price to trade into that inefficiency. May play around here, but as long as we maintain and keep that volume imbalance open, that's where we'll see price try to hold. If we negate that and we continue to just stay choppy in here, then we may run into the consolidation now that we've hit the buy side. So simply waiting for the closure, right? Closures are more important. So we pretty much closed right on that, you know. He's just confused, Dread. It's good. Welcome, Chris. I appreciate you being here, brother. I'm guessing you just had a bad experience with previous ICT people, which, right, it is pretty culty, so that makes sense. To be fair, you don't really know me or how long I've been around, so I don't take any offense to what you have to say, man. If you'd like to join and kind of see the precision that we are able to find, that's cool. You're welcome here. Right, no egos here, brother. This stuff works. I know what I'm looking at. Anyone who's been around, it's hard to argue that. I think you're used to a lot of the new gen ICT traders, brother. I'm not really a new guy. Boom, so perfect. Right, once again, and just as we would expect, as we say, those key areas in price. I had a short there, I didn't get it. That's unfortunate, actually. And that's kind of the one downfall of, right, my trading is that sometimes you get too precise. So I was going to try to short that into the actual 5 minute down here. and my short was on the volume imbalance, but we hit that perfectly, so I'm not able to get that. But as I said, just a little too demanding. We could have used midpoint, but as I said, if we're going to be choppy in here, I kind of have to demand a little bit extra out of those entries, and we just fell short. That's all right, Chris. For some reason, you seem upset. I'm not sure if somebody got you upset, but no animosity here, brother. As I said, I've been around, this is probably my eighth year. This is just the first time I've ever come out on YouTube, so that's all. As you said, no need to argue. Right? People that seem to argue with you are probably newer traders that don't necessarily trust their own ability. And yeah, right, ICT isn't the only thing that works. I'm not one of those people either. I think you've come in with a picture of what I may be like without understanding who I actually am, which happens, that's fine. Like I said, if you'd like to join, sit around for a bit, be back tomorrow, kind of see what we do. I think it'd be hard to argue against it. This is comedy. Hey, I like that actually. It helps. I was about to say, right? It's funny. You always get those people on either side. He's someone that probably really isn't trying to become like a trader for real. Maybe he is, but who knows? Right? People that are legitimately just trying to get to learn this, to create a better life for themselves, they're not really into that whole drama of I'm better than you in this way or that way. He just doesn't know what we're about here. That's all right. Ba-da-bop. This is hype. I love this. You all right, Chris? You seem upset, brother. Oh yeah, of course you should always have more than one stream of income, my guy. I said I made money on trading long before I came to YouTube. That's the only reason I'm doing it. Beautiful. All right, so once again, look at these algorithmic levels here. So as we trade up into that, if we're going to close inside the first presented, or excuse me, not the first presented, but this fair value gap, close underneath the first presented here, we would expect a lower delivery to continue. So as we said, we hold that volume imbalance. We're going to make another attempt into this bullish fair value gap. These are where the speed bumps will take place. So if the original objective now is equilibrium, which is the sell side here, as we trade up into these discounts, we would see price bounce, and then eventually we want to see those be negated, right? So we want to invalidate that as a discount, close below, which will then allow you to use that as an area of resistance. And then if you want to use that as an area of resistance, you would look for lows here. And as we said, lows here. Simply looking for this one because if we're going to take equilibrium now, so we want equilibrium of our current range. You take the low to the high, and we'll do the lowest low to the highest high. Oop. So you have your lowest low, you have your highest high. Right, in choppy markets and consolidating markets, after we clear buy side and return into higher time frame inefficiencies, price is going to revert and attack its equilibrium. This sell side pull is paired just above the equilibrium, so that's why we have that sell side marked. Because if the objective is to make an attempt back into that, it's going to target sell side as well. Now that we've closed below this 1 minute, this is where we would look to see, can we now use this as our area of resistance to send us into some lows? We do have a small volume imbalance in here as well. As we said, that's kind of where we would really want to see the last line of defense come into place. So if price did want to go all the way up there, we'd want to see bodies being held by that volume imbalance. But ideally, we'd actually just want to see the fair value gap itself hold price. So right there, we have a perfect closure on its low. We've closed below it. We give it a slight retracement, and we've closed perfectly on its low. If we're going to maintain bearishness, we'd want to see pretty much price now continue to fall. If anything, if we do want to try to go up into that volume imbalance, we want to see that the bodies are holding from here. If we start kind of getting above that with bodies, then we have a chance to either meander back up or attack the buy side. But if we want this price leg to maintain its bearishness, we would like to see that volume bounce there kind of be the area of resistance, and just make another pass at some lows. We do have a first presented here as well, so price may bounce midnight as well. Right, so don't forget that we've just hit midnight, which is why we're seeing the little short-term retracement. But this would be a case where, even though we have midnight here, if the objective is sell side, this would just be another speed bump as we're talking about. So price will bounce, give a short-term retracement, but then we'd want to see price actually close below that and make an attempt into some of these lower objectives down here. He's getting money from YouTube. This man is upset. This man is upset. That shit cracked me up. What happened to you, Chris? He's probably not here anymore, but he really was upset. How often do you trade the AM session? Never. It's like tomorrow morning, I won't do it. For FOMC, I always wait until afterwards, and then I just do the, usually just power hour, that last hour of the day. Probably true. That's kind of what you find though in the community, right? Like I said, I'm a little different than most ICT guys because I've been around a lot longer, so I'm not really like a cult fan of his. I have a lot deeper understanding. And most ICT traders feel like they need to defend him for some reason or defend their own ability. I'm like, nah, there's no need for that, brother. Beautiful. Yeah. Well, so far I'm moving exactly as we expect. As we said, if that's going to be the inversion, we would expect price to hold now that we've traded below it and just continue the bearish delivery. As soon as we close below midnight, that sets the stage for that continued bearish delivery. So we close below midnight, look at the perfect delivery up into it. We tap that level perfectly. We run through the low. And now we should get, as we said, sell side, I think. Once we do that, we'll call it a day. This first presented may be an issue, but if we end up getting stuck there, that's just fine. He said he don't know. That's true. He was confused. It's all right. That shit was... I made my day, though. That's actually hilarious. He came in hot, boy. He was looking to let off some steam. Go ahead. I'm the perfect guy for that, because I have, as I said, nothing anyone ever says will ever really get to me at this point. We're far past that progression. Maybe a few years ago when I was still unsure about how legit it was, but you know what I mean? That's why I always tell people themselves, just listen to them. Didn't always have the patience though. That's what I'm saying. It just had to build it. You get to a point to where when you see things so many times, like why would you let any other opinion sway you? Like if I know 2 + 2 is 4, and I've been doing that my whole life, why would I get mad if someone said, actually 2 + 2 is 5? To me, I just feel more sorry for them. You know what I mean? Chris, my guess is you've had bad experiences. Look at that delivery. I mean, let's be honest here, Chris. Not even like animosity, but did we not just outline exactly what would take place from the very moment that this candlestick closed? No ego or anything, right? Like, that's the one thing I say is like, regardless of what you feel about him, I was a skeptic at first as well. That's the only reason I dove into it. No, it's because you hear him talk, and ICT himself is very divisive. He's almost like a Trump, to be honest. Like that personality of you either love him or you hate him because of his divisiveness, which is why he gets kind of hate or love on both sides, you know what I mean? To me, I'm much more in the middle to where you go in as a skeptic trying to disprove the theories, and that the longer that I spent trying to, I guess, disprove them, the more I realized that, oh, it actually is kind of doing what he's saying. And that's why I did it. Oh, me not today. We had winning trades yesterday. Right? Not every day is a trading day. As I said, I'm more so for teaching. And that's another thing. You don't need to trade every day. Yeah, like go watch the previous streams, my guy. It's all there. That's another thing. Like I have nothing to hide. You can go back. They're all on YouTube. I think you know me better than you do, which is fine, but... Or you probably have seen like other ICT students who are new that just kind of yap away and are more so a cult follower of him, trying to praise him as the all-being power. Well, that's not me, my dude. We're simply trying to teach a skill set that could help you. Life is tough, man. It's only getting harder, right? If you can do something that can pay one of your bills a month and that's all you can ever make, that's more than enough. That's a lot of stress off right there. Oh yeah, as I said, Jane, haters are fine, brother. You get to a point where it doesn't affect you at all. It's more so like, not necessarily feel bad, but you almost just wish that they would make an attempt to learn. Like if they spent that same energy just trying to learn, not even ICT, but like something else, you know what I mean? Like spend that energy actually trying to improve and just get better. As you said, it's not really a competition. Or some people make it a competition. There's no need for it to be a competition. We're all just trying to better ourselves. Create better lives for us, our family. He's age rate. It could be that too, yeah. Yeah, that's fine. So for me, right, my thing is I don't really want to be in the middle of the range. So as you said in the morning, if we're going to be in the middle of the parent range, which is this low to this high, equilibrium's around here, best trades will come at the extremes of that range. So this setup would have been nice. But for me, we had a winning day yesterday. We come into today with the expectation that price is going to be choppy. So already I'm very low risk, right? I'm not trying to put risk into the market unless something clear cut. And just because you can follow the moves doesn't necessarily mean that you need to be involved in every swing. It's just more so being involved with order flow, what price should do. But for me, I'm not someone that has to be involved in every leg. Sure, at one point in time I would have tried to, but I understand where the highest probability setups will form. And for me, that's just what I wait for. That's what, as we said, yesterday we had a pretty clear-cut, easy entry, easy win. We're not going to go back and try to give that back today if we have an opportunity. How did he perform? Oh, he did terrible. Yeah, Chris, I think you're confused, my guy. I don't like... ICT isn't my father or something, man. Like I said, I'm not a cult follower. That whole Robin shit was corny as hell. Like, you can't get out there and say that you're going to break the record with 11,000% and then not. Like, who would back... No one, I mean... That's pretty obviously a giant flaw. I don't think anyone would back that up. As I said, you just don't really know me. Right, I've said this plenty of times, so... He said he's a 50. I like that. He probably does have fun though. I'm probably boring for him because he's not really getting the reaction, I'm sure. I guarantee you, like, other ICT traders are probably so salty. Actually, ICT is the best. You can't say that about him. Yeah, just the wrong guy. Just the wrong guy. Got to hit up some other ICT accounts. It'll go over better. And look at that, right? Once we trade into the sell side, right, reversion into the mean again. So yeah, just choppy, back and forth. From here, like at this point, right, because our objective was sell side, from that high to low, this is kind of where now we're more so in no man's land. And I don't really have a bias hard either way. Like, we could bounce and trade up through this. If we can reclaim the bullish, maybe we'll make another pass at the 1 hour. We could also hold from here and make another pass lower. So now that we really are right at the middle of kind of that range, like if I take this current one and show you, right? Look where the midpoint is. So when we're at that, that's where it gets a little bit more washy, just because you can be a little more uncertain of direction. All highest payouts from props is from, that is true, yeah. He's never showing L in every time reset demo. Yeah, I can see that, Natalia, for him. Like I said, ICT has its flaws for sure. I'm not someone that's going to sit out here and say he's the end-all be-all. That's goofy. Never been that type of person. You can't stand Michael, but have... And yeah, some people, right? Some people just don't like the way he talks, or he talks too slow. And there were people who have spent the time to learn the concepts that could almost convey them just in a simpler manner without all the filler material that he tends to get into. You got it wrong. He ain't the highest paid trade. What? Mm-hmm. The VWAP and stuff like that. Yeah. The only thing with those, I mean, and that's another thing too, is that like, I just don't think people have really spent the time to dig into what Michael has taught. Because Michael uses EMAs and SMAs. And that's why I also say, like, it doesn't matter what you trade. If you're making money, who cares, bruh? Yeah, in the past, like he's spoken, if you're unsure of direction, you can use EMAs and SMAs to help you with the direction. But those are lagging indicators, right? So they're almost like in the past. Whereas the actual lows, the open, high, low, and closes are always going to be there, and that's what those indicators are referencing. But yeah, they also help provide clarity if needed. Don't let him rile y'all up, fellas. Like I said, he's probably just trying to get a rise out of you. That's probably what he's looking for. He can't get it out of me, but some of y'all, maybe he does, so that's why he enjoys it. JCap is lit. He said the fact is hurting. The fact's hurting himself. Cool. So as we follow that, we would watch a midpoint. If we're going to maintain bullishness, we haven't got the volume imbalance yet. So we want to see that, right? That's going to be where price is going to find its kind of resistance. The original volume imbalance that we created as we headed lower. So now you want to see, if you're going to expect price to come back up into some of these inefficiencies, it will reclaim the bearish fair value gap. It'll trade above that, get inverted. And especially if we were to close above that, we'll also be reclaiming this 1 minute fair value gap here. So right, closure above both of these would set in the stage another run higher, especially because now we'll have the down close candle as we trade back into the discount, coming off of a run on sell side inside of a higher time frame inefficiency. You'd want to see now, do premiums give way as price tries to make an attempt to get up above these areas? As you said, we're really at kind of equilibrium of the new high to low. So if we're going to keep taking equilibrium of these ranges, then you can actually expect a potential run into that there, just barely. That's kind of what I'm watching, right? This key area in price, the volume imbalance that's paired with the upper level of this 1 minute. So far, you see it's kind of holding perfectly. If we end up making this a swing point, I would actually expect another run into this fair value gap here. Because what you would see is that, well, we've hit the high of the volume imbalance, we make another attempt to get above it, hitting the high of the actual fair value gap itself, still closing below. So now if this candle especially if it can't clear this candle's high, right? It's going to respect this volume imbalance and more than likely send another leg lower into the inefficiency. If we can't get above it, reclaiming all of this as a discount and using a new inversion, it should be nice up into some of these premiums up here. Last video, what was he saying? Last video, for example, half a video he's yapping about, I wouldn't teach you what I know. Oh, I didn't watch that video, so I'm not sure, I guess, what you're referencing. But yeah, I agree. I just don't get why, like, even if you don't like him, it seems like it's like a personal anger. You know what I mean? We're more so like, for me, if I don't think something's legit, I don't pay any attention to it anymore. Whereas it seems like ICT haters pay more attention to it just to get more upset. Just something I've noticed though. The recent upswing originated from VWAP. That's the midnight level though. That's what I said. The indicators will work because they're referencing key levels in price. And that's why they do work. Because the actual underlying candlesticks are creating the key levels themselves. Right? And that's why I'm not arguing against you necessarily, Pig, but like just for thinking. You would be able to trade these levels with the candlesticks only and the key reference points without needing the indicator. Whereas if you didn't have the VWAP indicator, you wouldn't necessarily know why that went long. Like if you're someone that's not familiar with ICT or the concepts or anything, or the VWAP, and you didn't have the VWAP on, you're not going to notice that. Whereas you'll still notice it if you understand ICT and the concepts based off the candlestick delivery alone. Right, and that's just something I've come to realize over time. Because I mean, when I started, I was kind of the same. I used the EMAs and the VWAP and all that stuff too. But kind of like you're saying, right? You realize that the setups are taking place where the VWAP is, and I noticed that as well. So then I would look, well, what is taking place beneath the VWAP? Like if I had the VWAP off, why is it still bouncing there? And that's when you start to realize that the actual underlying reference points, like that's not random there, right? Look where the candle bodies are stopping. Sure, there's a fair value gap here, but as we say, the time-based PD arrays are more important. This is the midnight level. So the fair value gap, the bodies are wicking into consequent encroachment, but the fact that that midnight level is holding perfectly. Perfect. Da 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 do da 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 do da 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 do. He said, "Leave Michael alone." It's all right, Peter. Nah, see, you don't ever want to be like that. Just let him. You don't have to defend his honor. You've noticed that with Romeo. That is actually someone to, yeah. Very contrarian. But like, right, that stuff sells. Drives engagement. That's kind of the same with the old, like, Patrick Wyland. That when him and his IT drama. The more drama you create, the more buzz you're going to get. And people like that don't necessarily care if it's good or bad. Even ICT himself said, right? He doesn't care if he gets good or bad attention. He just wants attention. Which is why I think he can't ever leave. Because my man has said, he's like, I'm done. This is the last year. Next year comes. All right, this is the last year. Next year comes. All right, this is actually the last year. That stuff cracks me up. But hey, I respect it, Peter. You're looking out for us. I respect you. As you said, I'm not someone that's ever gonna really feed into drama, man. No need. We're all trying to make our own way in this. Some ways will work better for others. No, I don't believe him. I believe myself. I think that's where the key difference is. As I said, at a certain point, you kind of just see things enough. It's just like reading a book. Very true, AA. Yeah, like, right, you'll get more engagement, but the quality of the engagement, that's where it gets fishy. And I've always been someone that I don't need a large, like, I'm not trying to be an influencer. I think a lot of people get into this to like be influencers per se. Whereas I'm more so just trying to teach a skill that can help people. Help them however it may. So we said we got up into equilibrium, so that's what we were looking for. Right, you take that current range high to low. Choppy markets, price will continue to revert. We hit it, consolidation, and now you get the breakaway. So we'll see if we still can't get the 5 minute. Who loses though? That's what I don't understand. Like, back into the fair value gap. Still holding that, right? So we're still holding midnight, holding the actual fair value gap here. As we said, if we're going to be in the middle of the range, it's going to be choppy. So we'd want to see it. We can give multiple reversions into the original discount, and price can hold there in a bounty market. Midnight level still here. Now you don't want to get lost on the higher time frames either. So it's always nice to, or on the lower time frames, excuse me. So we still have the 5 minute. Like, I'm looking at a 5 minute here. I don't have it marked just because there's so much going on, but I'll pull it up now just so you guys can see it here. So on this 5 minute chart, we've inverted this 5 minute here. So even though we're going lower, I'm really looking at the 5 minute candlesticks themselves, because you don't want to get lost on the 1 minute. Right, that's something I always have the higher time frames up as well. So I'm not only looking at this, even though this is primarily what we work on, you need to have the higher time frame reference points, especially in the consolidation. Well, yeah, brother. Like I said, we're not here to entertain people. There's a big difference between entertainment, which I think most of the ICT traders you run into are just that. More so trading for entertainment, whereas I'm trading to make a living, right? This is what I do. So if I already go into today not expecting a good delivery, I'm not going to force an entry to make people happy. That's funny. I mean, you quite said it yourself, Chris, right? You're looking for consistency. Consistency doesn't come by everyday trading and forcing entries. And that's with any system. So I think we agree almost, which is cool. Yeah, we agree. I'm glad you were here, Chris, because we agree. That's cool. So we get the second tap of midnight, second tap of the 5 minute, right? Higher time frame, rely on that. I still like that volume balance. We have that little swing point now, so as we trade up into that, that should be an area that price can reach up into. I think the better question is, why are you live here? You know what I mean? Like, if you believe in other stuff, why not spend energy trying to learn that stuff? You know what I mean? Like, I think you're looking for confrontation for some reason where that's not me. You might find other traders that want to engage in that, but as I said, brother, I come from a different cloth. Grew up dirt poor, learned these things that changed my life, realized that they have the power to help others. And that's all we're trying to do. Especially nowadays, man. The world's a very uncertain place. Things aren't easy. Why breed competition and comparison when there's no need for that? Ba-da-ba-bo. Nice. So we got that volume imbalance. What time is it? 11. We'll wait till lunch. Once lunch comes, we'll skedaddle out of here. Yeah, most of them do lose on a daily basis. That's because they're trading for entertainment. Or they're not really understanding what they're looking for, and they're just coming out on YouTube to try to grow a following. Whereas me, right, that's kind of the other way. I made sure I knew what I was doing before I came out on YouTube. Or anywhere, really. And I've been doing this a long time, man. I think you're just uncertain of me specifically. I'm guessing you kind of have an overlying idea of what you expect ICT traders to be like. Are there any concepts I don't find useful at all? I mean, it's a good question, actually. Let me think. I guess there's concepts that I don't really put much emphasis into. So like really within the last 2 years, he's come out with a lot of different things. So like, I'm trying to even think. Like gray pools or like the Venom or Medusa. Like all of those things I'm not really looking for at this point. Another bad thing with him is that he has so many concepts that when you're trying to learn, it's almost too hard. And that's why I think people struggle. Is that he is someone that has so many technical concepts that if you're trying to learn them all at one time, you're never going to progress because it's too confusing. That people say that all the time. But I mean, I agree, right? They're boring. They're long-winded. I've said this many times, but I've legitimately listened to every single video on his YouTube more than once. Every single one. I guess maybe I'll say within the last year and a half, 2 years, I haven't. So up to that point, I did. And it was an absolute grind. It was boring. I had to listen to it more than once because I would doze off a few times, right? But for me, I've always just liked to know things very deeply. So although it was boring, and I was kind of like this in school, I never minded listening just to see if there was any other valuable information. And I think that's why I can kind of come out here and do what I do now. Right, where I'm a lot more precise and really more than any other traders, ICT traders anyways, just because I've spent the time to actually learn everything for the most part. And which is also why I have a little bit better time explaining the concepts and what should happen. Yeah, the Judas swing I like a lot. But once again, that helps a lot for trending markets, but still in choppy markets it helps. But yeah, like Judas swing, that's a good one. Silver bullet is more so just a time window paired with a concept. So every now and then, yeah. But it's not like I'm only looking for a silver bullet, if that makes sense. Like if we have a trade that falls within the window, then you can classify it as a silver bullet. But I'm not necessarily going in saying, oh, I need to capture this silver bullet trade. But the Judas swing is Judas swing is legit. That's a legit one. That if you're on side with that, you'll get, those are some nice trades for sure. I like that a lot. ICT traders don't struggle at all. Some market. I mean, I would disagree with that. And that's coming from an ICT guy himself, right? Pure ICT. Is that I know traders, and I've tried to help traders that simply can't grasp it because they're trying to learn it all at once, or they're trying to apply all the concepts at the same time, when that's never going to work. Of course, markets make it more difficult. That's facts too, right? Me too. So that's why his loops feel like Trump's loops. Yeah. I mean, I honestly would agree with that, right? I don't like Trump. I'm indifferent to all that nonsense. And I would agree that Michael is kind of a Trump personality. No doubt about that. Oh, well, yeah, naughty, that's for sure. Like I said, anyone that's been around long enough knows when and when not to engage. And that's also why I'm fine missing moves, right? Like, the market's always going to be moving, and there's always going to be moves. So would I rather try to force something in a, what are we? 12 handles? We've been in like a 12 handle range all morning. Is it worth trying to squeeze out 5 handles in that when there's really no need after catching a nice long yesterday, right, off of the pump up? There's really no need at all for that. Hey. That's with anybody. That's any concept. Someone's always going to be buying, someone's always going to be selling. The concepts don't make you the trader, right? The experience does. I've been the first person to say, if you're trading ICT concepts just for the concepts, you're no better than a retail trader. You're just trading patterns for patterns' sake. Is there a concept you feel is most reliable? Most reliable is tough. I would say, most reliable. If I had to say one, I would probably do the purge and revert theory, which is kind of the, right, you have the original liquidity in a trending market. So let's say you have the original liquidity you're aiming for. If price purges that and aggressively, especially if it creates a fair value gap and aggressively reverts that, that's going to be an entry that almost always is going to work out. I like that. All right, those are kind of my favorite ones because it incorporates quite a bit, right? It incorporates the run on liquidity. It incorporates kind of a break in structure. It incorporates invalidating previous premiums as we clear that liquidity, or discounts if you're long or short. So I like that, the purge and revert. Yeah, if you trade it just for the patterns, it is retail. It's all retail. Retail traders trading is retail. Don't even consider. Yeah. Exactly. Right, Natalia? Like we said, sure, there's setups, and as we said, we could follow the setups. Does that mean you need to be involved? No. And that's really where the maturity comes from, like traders, like early ICT traders, or really any traders. They'll see something and they feel the need to immediately engage with that. Sometimes it works, sometimes it doesn't, without understanding kind of the overall market conditions. Whereas as you progress, as you start making money, as you start doing this more so for a living, you realize that sometimes, right, the market conditions don't allow for you to put the risk that you want to. That doesn't mean that you can't see the setups or that they're not there. It simply just doesn't meet your rules. Once again, I do say that original fair value gap continues to be referenced here. We'll see if we can get into that. It is noon, so yeah, we'll probably just wrap it up here. At this point, we'll just yapping. Order flow traders would call it a sweep. I mean, I would say I trade order flow. ICT allows you to see order flow. Because I reference order flow all the time. Like, right, current order flow would support this idea or shouldn't support this idea. It's all just semantics, fellas. I'm getting too deep into it. As I said, it's all just a language that helps you understand price delivery, true price delivery. I think people just look too deep into it. Like, I'd be seeing people on Twitter talking about like Fibonacci sequence and ICT's logo. 330. I'm like, bro, now we're getting too deep. That's where the cuckoo clan, the crazy people, start popping out the woodworks. Simple is better. But for us, we're done here. That'll be all for today. So no entry. No entry at all. So the actual, right? The actual live account. Nothing here. Just watched all day. So yeah, and that's because, like we said, just ugly. We were expecting consolidation. It opened choppy. It ran into where we expected. It didn't give me the soup I wanted. We were going to try to soup that high before we ran lower. Instead, it just ran lower right away. As we hit that again, I was just waiting for it. And then from there, we just kept bouncing. I use a few different ones. I have an ICT all-in-one, which is like a private indicator. TBR first presented. So my first presented fair value gaps are this one here. I don't know how to pull up this. And then just the watermark for the name. But it really doesn't have anything to do with trading. So the ICT all-in-one and the first presented are the only two that I use for actual like price reference points. Da-da-da. Oh, cool. Yeah, we'll leave you guys there with that. Interesting day. I always love a good entertaining day like this. A lot of info shared, a lot of things understood. At the end of the day, we understand this is a different place than most, right? No need for comparison, no need for competition. Simply trying to better ourselves. Learn a skill that can provide for our family. Or for yourselves, regardless. We'll be back tomorrow. Let's see, just to be sure. Oh yeah, tomorrow's FOMC. So we're gonna be back. It won't be until the afternoon. I don't necessarily like the morning of FOMC. 1:30, okay. So yeah, FOMC is two-staged. We'll be here like 2:45 Eastern is when it'll be. So just before power hour. And then I like to trade power hour for FOMC. So until then, everybody, have a great rest of your day. Appreciate y'all hanging out this morning. And I will catch you guys tomorrow afternoon. Take care.